What we have presented today is that on top of the 4 billion buyback that we have already initiated and executed about half of it, we're now adding 3 billion to that. But we're also putting in a general policy as a philosophy that on the free cash flow after dividend and minor M&A activities, that we want to signal to our investor that that money is available for future buybacks. So if we keep on producing cash flows like we have over the last few years, there is more potential, absolutely.
Okay, that's interesting. It sounds like it could become a new normal then, if you continue to have these kind of cash flows.
I think what we wanted to tell our investors is not only are we putting another 3 billion into this because we believe in our future strategy, but also tell them longer term, the policy that we have in place is an investor-friendly policy so that they know that we have their interest in mind going forward as we execute through this transformation of the auto industry in our company.
What is the outlook that you're seeing then, Ola? The global auto market is starting to slow. How are you adjusting to that? What is your outlook for this year?
The macro environment indeed is quite challenging. So the three big economic regions, we're not looking at a lot of growth momentum in those regions in 2024. We still have the effects lingering from the higher interest rates, and China is also going through some structural challenges. So what's our game plan to take us through this? It's attractive product for our customers. We're launching new vehicles this year. We're coming off of some very important launches in the second half of 2023, especially the E-Class, which is a centerpiece of our portfolio. But we also need to have flexibility, and we have that in our plan. So we will go with the market and make sure that we carefully manage this equilibrium between volume and price in a thoughtful way.
Okay, will you talk about that equilibrium and the volume to price ratio? You have been cutting the prices of some of your models. Do you expect further price cuts ahead? I mean, obviously Tesla kind of kick-started all of this with some pretty, frankly, brutal cuts to prices, and then other automakers kind of piled in. Are we just at the start of this price cutting? How do you see that story evolving?
The competitive intensity is high, especially in the electric vehicle market, as you mentioned. But we have the value of our customers in mind. So we try to stay very disciplined and protect our position because we want them to be able to rely on a Mercedes and rely on the residual value. So as far as Mercedes is concerned, it is value over volume. We then rather flex and make sure that we manage that equilibrium in the right way. But 2024, in terms of the macro environment, is going to be intense.
And you've pared back your expectations in terms of EV sales. Is that again a question of the macro? We've obviously seen a slowdown in terms of growth of EV sales in Europe and the US. You're paring back your expectations in terms of deliveries, in terms of targets. Just underscore what is behind that.
I don't think anyone had ever thought that the once-in-a-century transformation of the auto industry would be a straight line. There will be peaks and troughs, and things like build-up of charging infrastructure and other enabling factors also will determine how the market develops. And that is where it's a good position to be in, where your factories can build both BEVs, but also high-tech electrified combustion vehicles. So we have that flexibility in our production system. But we're also readying a next generation of vehicles that will start coming in 2025, 2026 and forward. So a whole wave of second-generation BEVs are coming from Mercedes in the next 2 to 3 years. So I see very good growth opportunities for BEVs ahead.